Well, again, thank you to everybody that's joined us today for this session of the 2017 AgrAbility Virtual National Training Workshop. My name is Paul Jones, for those who may not know me, and I manage the National AgrAbility Project here at Purdue University. Today's session, or this morning's session, is on FSA Farm Loan Programs, and our presenter is Norman Cummins from the USDA Farm Service Agency in Washington, D.C. Before we get started with the presentation, just a few basic instructions. Your audio is available either through the computer or phone line, and you can check that through the Communicate menu, the top left of your screen. If you need closed captions, you can go to the Media Viewer on the lower right side of your screen, expand that with the arrow, and you may need to enter some information and hit Submit, and then you should be able to see the captions and adjust them to your liking. You can also expand or contract any of those options on the right side. You may need to do that in order to see some of the remaining options. You can also expand or contract the size of that entire column by clicking and dragging on the border between the column and the presentation window. If you have questions during the presentation, please feel free to enter those into the chat option and hit send, and we will be collecting those. We also ask that you do send those to all panelists rather than to a specific individual so that we don't miss any of your questions. Also, during the question and answer period after the presentation, you may click on the hand icon. It should be near your name on the participant list, and we will do our best to enable your microphone or phone in order for you to ask those questions verbally. We do have 4 quick survey questions at the end of the presentation to get your feedback. We'd appreciate your sticking around for that. We are recording this session and archiving it on our website, agrability.org, and on the online training link. If you do have any problems with technical issues, please use the chat option, or you can email me, jonesp@purdue.edu. For those of you who may not be familiar with AgrAbility, our program is sponsored by the U.S. Department of Agriculture. We focus on issues of disability in the agricultural population. Every AgrAbility project around the country is a partnership between a land-grant university and at least one nonprofit disability services organization. And currently there are 20 state projects around the country. There is one additional national AgrAbility project, and that's led by Purdue University's Breaking New Ground Resource Center. Our partners with the national project include Goodwill of the Finger Lakes, April, and Colorado State University. And you can find out more about AgrAbility at agrability.org and view the many archived webinars we already have on that site. At this point, I'm going to turn things over to Mr. Cummins. I'm going to mute my microphone, turn off my camera, and then I will return at the end during our polling time.
Thanks, Paul, and good morning to everybody. And as I like to say to the people on the West Coast, I'm talking to you from the future. It's a pretty much standard line I like to say every time because I know I'm talking to people from all over. I want to do is introduce myself. My name's Norman Cummins. I'm a senior loan officer here in Washington, D.C. I have worked for the USDA under the Farm Service Agency, specifically under the Farm Loan Programs Loan Banking Division, where I work in the Direct Loans Fund Management branch. A lot of what we do here is the policy that directs the loans that are out there. A lot of the farm bill that comes in, which is actually we're starting to work on and get information on for next year's farm bill that's going to be coming out. And we work with the Hill accordingly when we have information come down. And one thing I do like to share is where I'm actually talking from, so that you can kind of get an idea. If I point up, that's exactly where that red arrow is right now. This is the USDA's South Building. FSA's headquarters is on the quite a few floors. Administrators down the hall from here, so at least you can get an idea of where I'm located right now. And if you were to step out that door of the building right there and look to the left, you'd actually see the Washington Monument, and down the street's the White House. But I always like to share that, so at least you can kind of get an idea where I'm located. So what is Farm Service Agency? We're an agency that provides services to farmers through loans, payment programs, commodity price support, conservation efforts, and disaster recovery assistance. Besides the loan programs, there's a lot of different areas of expertise. I wouldn't even be able to answer a lot of this stuff just before the fact that we have experts in every little expert area. I work in the direct loans specifically. These programs are administered through 51 state offices and over 2,124 county offices, including offices in the U.S. territories. So if you, after you get this information from me and decide that you want to reach out to a county office, I will give the website out that you can find where your office is located. So one of the things we like to do before, I like to give the basic lines of that we're a lender of first opportunity and provide credit to agriculture producers who are unable to receive private or commercial credit. And part of our stipulation, and I'll talk about it later, is one of the requirements for our loans is that you go to a bank, try to get credit, get denied, and come to us. But there's points where we can actually look at it before you even go to bank and realize that you're just, especially for beginning farmers, a bank's not even going to talk to you. But we like to send that out there and tell you if you're a beginning farmer, rancher, a veteran that just got out of the military, looking to get into farming. And we find out that a lot of our veterans, I'm a veteran myself, they come from rural areas where agriculture was a big part of their lives until they decided to sign up and go into the military. So there are loans out there that I wouldn't say cater to the veterans, but there are a few benefits that I'll talk about later for veterans. As far as our minorities, women, we have money set aside for that just in case, we run out of non-beginning farmer money. We always make sure we try to have beginning farmer and money for the SDAs, which is our basically socially disadvantaged. And we want to make sure that we do have the funds out there for you. Before I even get into loans, we do have different types of loans depending on your current situation and what you need the loan for. I will go over those, some in detail, some briefly. I'll focus more on our beginning farmer area just because usually when I'm talking to people through webinars for loan programs, it's usually our beginning farmers or startups or farmers that have just been in it for a few years but are looking to expand. So what type of loans do we have out there? For me, I work on the direct side. So for the direct side, we're going to have farm operating. We have farm ownership. And I'll discuss those in a little bit more detail, the requirements, the eligibilities for that, and kind of what we look for as far as security. So we also offer emergency farm loans. Those are a little bit more tricky and would take a little bit of time to explain. We even have to go through it every year when we have emergencies to our loan officers because it's not something we normally do. So if there's more information you need in that, you'd want to reach out. I mean, you can call me personally, and I will give out my phone number, or you can reach out to your closest loan officer. Guaranteed farm loans, I will briefly discuss that just real quick. But basically, that is a program that you will go to a bank, and then we guarantee the loan. Like I said, for the minority and women farm owners and ranchers, there's not a specific program for that, but we set aside funds for that. So basically, for a beginning farmer, we set aside as far as our direct operating loans, and I'll discuss the operating loans. 50% of our allocated budget is set aside for beginning farmers. That's for direct operation loans, and then we keep that money in that pocket until September. Then we pull it out. So that's ensuring that you have funds out there. As far as guaranteed operation FO, about 40% of that set aside for that. So that's money that if we run out of non-beginning farmer funds, cannot be touched until a certain date, so that we make sure that we're helping out our SDAs. Same goes to direct FO. Actually, direct FO, which is farm ownership loans, is if you're trying to buy property, we set aside 70% of that for SDAs, and that's not pulled out of that account until September. So if we run out of non-beginning farmers money and it's not September yet, It's basically be set there for beginning farmers or SGAs. So now I'm going to really get into kind of some of the meat of some of these loans. I'm going to talk about the guaranteed loan program real quick. For a guaranteed loan, you're not our customer. In a way, you're actually the bank's customer. When we do a guaranteed loan, we're most likely not going to even see you, especially if you aren't a regular at the county office and know the loan officer, or if you've been doing business for a while. It's also something where we want people to graduate to go start going to banks for these loans. They can't keep relying on the government programs we have out there for the fact that we want to start up other people and we need those funds for that. We're trying to what we call graduate you so that you can actually progress into a thriving business. So for guaranteed loans, what will happen is you'd go to the bank, submit the application, and depending on the amount of it and what type of bank you're going to, we're going to guarantee up to 95% of that. The bank itself would communicate with us. We would go work with the bank itself, so there would be no need for you to even contact the county office for a guaranteed loan, unless you had some questions as far as what banks do guaranteed loans in your area, and it's different all over the country. So that is something you would want to contact your county office for. The FSA guarantee permits lenders to make agriculture credit available to farmers who do not meet the lender's normal underwriting criteria. So if a bank, you can go to a bank and they're unable to finance you on their regular portfolios, a guarantee is a good way to go. For guarantees, the maximum loan amount for this fiscal year 2017, which goes from October to basically end of November, is $1,399,000. So, and it actually adjusts every year by inflation. Depending on the type of loan for a guaranteed, it could be up to 40 years. So it really depends on what you're getting it for. If you're getting it for an annual operating loan, of course, that's only going to be a year. If you're going to get it for something that's not even going to last 40 years, property-wise, it's probably going to be the length of that property. It really just depends on what you're getting it for. But for real estate, I mean, there's an opportunity for it to go up to 40 years, so you get your payments spread out. Unlike our direct loans, guaranteed farm loans are like any other loan that you get. They're usually going to be required to pay monthly. And I'll explain why I'm saying that later on. So now let's talk about the loans that I work on. Like I said, I'm from the direct loan side, loan making side. So for direct loans, we have what's called your general eligibility requirements. These are the basic things that we will look at right out of the chute. And if you don't qualify for any of these, you're going to be instantly denied without us even moving farther in the application process. I'll tell you straight out, it's very, very rare that I deny somebody when I was in the field for any of these areas. So, but just so that you know, these are things that we're looking for. When I document that no controlled substance convictions, if you've ever been arrested for trafficking, anything that's drug related, you're going to be instantly denied. However, if there's been a time in your life where you decided to live on the edge and cultivate marijuana and got arrested for it, there's a little bit of a time frame that we work on that. It's 4 years of the yield on that you might still be qualified for that. So just be aware that that's one of the first things we'll look at. Anybody that's signing the promissory note has to have the legal capacity to incur the obligation of the loan. So basically, you know, by our standards in the U.S., you have to be legal to sign this loan. You have to be a U.S. citizen. We do non-citizen nationals or a qualified alien under applicable federal immigration laws. But the one thing about that, if you're getting a loan and you are a qualified alien, if your work visa or your green card expires 5 years, you're not going to be able to get a 7-year loan. So just be aware of that. But we do have a lot of immigrants out there that have used our loans and are helping our agriculture industry. And as far as one of the things people are worried about when they're getting loans is acceptable credit history demonstrated by debt repayment. Unlike a bank has a tendency to focus on credit scores. I mean, that's the big thing. We know that anything over 700 is a great score. We start getting in the 600s, it's hit or miss if you're going to get financed or not. If you're in the 500s, forget it. I mean, you're not getting financed. That's why we consider ourselves, the lender of first choice, is because we understand that things have happened in your life. People do get medical history that all of a sudden you can't pay your medical bills. One of my last loans that I did, their kid got basically really hurt in a car accident, and they had a lot of medical bills. So that's just something to be aware of, that we understand that. We just have to be able to justify that. But if you have a past due on tons of stuff and you're 20,000 past due and you're delinquent for years, we're going to have issues. So just realize that that's something that we will look at. Now, I'm not going to even really try to go into to LLCs and entity members, but in case of an entity, all the members must be able to obtain sufficient credit elsewhere to finance actual needs at reasonable rates and terms. So basically, we're going to look at everybody that's part of the LLC. If there's a member of that LLC that can actually get credit from somewhere else, then it's going to be hard to qualify for our program. So that's just something to be aware of. But we do a lot of married couples where they form an LLC. Sometimes several farms form an LLC, and that's things that we will look at. Anyone that signs promissory note must not be delinquent in the status of federal debt. A lot of times it's school loans where you're a couple months behind. Get yourself caught up. We understand. Just don't come to us with any delinquent federal debt. We have a system that we'll be able to pull, and we'll know right away if you have any delinquent federal debt, and that'll automatically disqualify you. So I've had it where people have had some outstanding school loans that, they were a couple months behind, got themselves caught up. We waited a couple months. We were able to process a loan for them. So it's something to think about. And again, just like, outstanding debt, there's unpaid judgments obtained by the United States in any court. So if you have any outstanding judgments on there, we'll have to get those cleared up before we can get you qualified for one of our in-house loans. Just be aware that, we do understand things do happen. So that's just, don't fret if there's been issues in your life. And again, these are just our general eligibility requirements. And again, for all entity members, in the case of an entity, must be ineligible due to disqualification. So basically, if you've lied on federal crop insurance violation at any time, that you're going to be disqualified. I personally haven't run into it; they're out there. But if you've ever lied about your insurance when you've been farming for a little bit, that'll automatically disqualify if you were found in violation. And one of the things I'll talk about in a little bit more definition is you have to have sufficient managerial ability to assure reasonable prospect of the loan repayment as determined by the agency. That's why we have a program called Microloans, and I'll talk about that in a little bit. But as you try to get higher dollar amounts, the more required experience, and I'll discuss that later. And basically, if you're going to agree to get a loan from us, and the loan officer requires you to have some kind of financial or borrower training, you will be required within that 2 years of the loan closing to attend those sessions, and they'll help you out as far as tell you where they're located at. And if you do not attend those sessions, we will not be allowed to actually give you another loan. I've run into that a few times where people try to get refinanced or expanding, and they never attended the training that was required by us. But it's not always going to be required. You can get waivers in certain circumstances. And basically, applicant must be the operator of a family farm after the loan is closed. So definition of family farm, this is straight out of our policy manual. And you can actually find these policy manuals online if you want to really understand the laws and regulations that we're working on. It's going to be Farm Loan Programs 3 is the main book for direct loans. But basically, it's going to be here in a nutshell. This is what a family farm means as a business operation. And I'm not going to read all this literature because I want to discuss some of the other issues. But the reality is a family farm, what we look at is your operation making over $1,000. You're growing a few tomatoes in the back of your yard, and you're not really even selling them, or maybe you're making a couple $100. It's more of a hobby farm, and we don't consider that a family farm. So that's just something to think about, that, you kind of use that $1,000 mark as our threshold. But we understand that sometimes you're not going to make the $1,000 within the first year, depending on what you're trying to grow. So now let's talk about the farm ownership program. Okay, so now that was a general eligibility for all direct loans, which covers operations and farm ownership. So for farm ownerships, these funds can be used to acquire enlarge a farm or make a down payment on a farm. So if you're trying to purchase a farm, this is the type of loan as far as you'd want to go through in the direct loan. And I'll tell you the dollar amounts in a little bit. You can use it to make capital improvements to the farm by the applicant or for construction. I've had people that have added refrigerators, added a barn, anything on the property. that's improving the farm, you can actually use an FO for that. You can use it for soil and water conservation and protection. One thing I would say about that is if that's what you're looking at, is actually go to the county office and talk to some of the other divisions, because there are grants for that, and so don't really see always a full need for that, but just in case it's out there. You can use it for loan closing costs, but there's stipulations on that, and that's something you would want to talk to your loan officer about. And you can also refinance bridge loans if the conditions are met. If you don't know what a bridge loan is, usually what happens when we end up with bridge loans is we're doing a joint with a bank, a guarantee loan, and we're also doing a direct so that they can actually pull a little bit more money together. Sometimes what happens is when we run out of money during the fiscal year, but there's a time frame on purchasing that property, well, the bank will actually do a bridge loan so that they can get the loan closed in the stipulation that once we have funding again, we'll actually fund borrow the loan to pay off that part of the bridge loan. And just like any loans that I talked about, you had the standard loans. You must comply with all the general eligibility requirements that I discussed. You can't have any prior debt forgiveness for farm ownership. If you've had a loan with us before and things didn't work out correctly and you got debt forgiveness for it, you will not qualify for a farm ownership loan. And you must be the owner operator of the loan. If you're an agency, an entity, an LLC, it's kind of more convoluted, but you have to have a majority of that party be running that farm. You can't just purchase a farm and just be the owners that aren't even participating in that farm at all. As far as farm ownerships, there are stipulations as far as experience. You've had that for at least the last 3 years. Out of the last 10 years, you have to have had experience. Now, that even goes for and I'll talk about the Microloan program in a while. When it comes to farm ownership loans, that 3 years of experience is required. Now, here's where being a veteran will come in handy. With a veteran, you can actually get a year of experience if you were in kind of some light leadership program within the military. So that's a year out of the 3 years that'll help you out. It also goes for if you were somebody that's actually gone to college or had managerial experience, that'll help for that. But that's something we're real stickler to as far as getting our farm ownership. And so for the farm ownership itself, anyone who signs a promissory note must at least meet one of the following conditions. You must meet the definition of a beginning farmer, and I'll kind of talk about that briefly, where I've not had a direct FO loan outstanding for more than a total of 10 years prior to the date the new loan's closing. So if you've gotten a loan from us before and you've had that loan outstanding for 11 years, you're not going to qualify for another FO. Let's say that you've had it for 9 years, you still can get another FO, but once that year ends, and it doesn't go always by date, it's almost by year, within that year that you got it, it could expire on you. So it's something to think about if you're looking to expand your property and you've had a loan for a little while. So the loan limits for the FO with a direct is going to be $300,000. In case of an entity, as far as if you got an LLC and you got a couple partners, it works out a little different. You don't total their total debt with us. It'd be based on individuals. So let's say Farmer A has $100,000 loan with us already as an individual. Farmer B has $50,000. You don't add the $150,000 up. So what you would do is basically, because this Farmer A already has $100,000 outstanding debt, it would only be able to get qualified for $200,000 more for us, because that would put them at the threshold of $300,000. With Farmer B, it would be a little different, but the problem is Farmer A already has a higher amount. So it's something to think about if you're going to form an LLC. And for the program itself, you cannot refinance real estate debt. It's prohibited except for bridge loans, which I explained earlier. And you must be required to comply with all applicable federal, state, and local laws and regulations governing building construction. So you can't just get a loan from us and throw something up. You have to go through the permits with the city or wherever you're building it and follow the codes. Especially if you're going to use it for doing water irrigation. You have got to make sure you follow the regulations, because we will not get you a loan. It's something that we do look at. So one of the questions we always get, what's the interest rate on these loans? Okay, so farm ownership program, and I'll tell you right now, I actually pulled up the report. It changes on the first of every month. I hadn't looked at it in a little while. It looks like it's gone up about 0.5%. Right now, if you were to close a loan and get approved this month, it would be at 4%. So you'd want to look actually in what's called our Farm Loan Programs Policy Manual number 1. You can actually find the interest rates that are changed monthly on the first. So that's something to think about. And since I have this open, I'll tell you the interest rate for the operating loan, which I'm going to go into next, which is currently at 2.875, which is definitely a lot better than going to the banks because we don't want to stress you with the interest rate to get you guys started in agriculture. So one thing as far as FO purposes, there is stipulations for microloans as far as the scheduling of it. Microloans are only good for 25 years. If you got an FO microloan, for an FO standard farm ownership loan, it could be good up to 40 years, and depending on the time limit, we do it in increments of 5 years. So we just want to make sure you're able to pay the note back. So we're not going to do a 10-year loan on you and it's impossible for you to pay back. What I normally like to do, especially on property, is extend it out for 40 years. And then if you can pay back early, great. And so again, like I said, that microloans is only good for 25 years. And this is a program that we actually introduced last year, where there's a little bit less paperwork to do the FO, but there is still some requirements to it that are the standard for farm ownership. But one thing we do look at is that if you've had a youth loan with us, we'll count that time towards the management of the 3 years. And for payments, what we do for payments, unlike a bank that I told you that are normally monthly, we schedule our payments annually. So we understand that if you start a crop, you're not going to have money to start paying the note the very next month. We can extend it up to 18 months. So on a certain date, yearly, and it's the date that you close the application or the loan, you'll be required to make a payment. And that's something you'll talk to the loan officer about. But we do have where we can play with it a little bit as far as the first few loans and just pay the interest instead of the principal, especially for if you're doing grapes or something that takes a little bit longer than just an annual type crop. All right, so operating loan. So I just discussed the farm ownership loan, which is buying property. Operating loans are a big part of what help farmers get started up. It's a big part of our microloan program where people are trying to start a business, and that's what you're doing as somebody that's getting into farming. You're starting a business. So you can use the money associated with reorganizing a farm to prove its profitability. Let's say you have some outstanding debt or something like that that's from a creditor. You can use it to kind of refinance it. That helps the bottom line of your farm. Sometimes you have some old, outdated equipment that by buying something new is actually going to streamline your farm and make it more productive and help it out. So that's something you can use the loan for. You can purchase livestock, poultry, farm equipment. I mean, there's just a variety of stuff that you can use it for. One of the things that we'll tell you straight out of the chute, if you come into our office talking about wanting to do a horse farm, you're talking to the wrong people, unfortunately. We just don't find horses an agriculture type commodity. It's more recreational, and so we do not do horse farms. But what I tell people, if that's something they're interested in, work on a normal standard agriculture type farm, grow a crop, and build into something on the side for the horsing. A standard usually on our annual loans is you can use it to buy the feed, the seed, the fertilizer, pesticides, any of the farm supplies to get you started for that year. That's what a lot of our borrowers do, is get that loan from us beginning here. It can also be used for cash rent and family living expenses. But that's something you'll want to talk to the loan officer about. I mean, basically, again, the payments are, you can use it if something happened and you want to make your next principal and interest payment, but it must be on your payment. It can't be delinquent. It has to be within that current year. They can be used to finance commodities. So let's say you're a dairy farmer, but you need the money to buy the bottles to bottle your milk because you don't have a normal pickup for it. You can get a loan for that. Or if you need the canning supplies because you're canning your commodities. There's ways that you can use to finance that. So it's something that we will look at. You can also use it associated with land and water development use. And again, like I said earlier, if that's something you want to do, I would actually go to the county office and talk to some of the other agencies there to get a feel for what grants are out there. Again, you can use it for loan closing costs that are reasonable and customary. And again, if you, let's say that you got a visit from the health inspector because you're doing broiler chickens, or you're doing pigs, and OSHA tells you that you have to make some changes here, you can use that loans for doing something like that. And that's going to be kind of the norm if you do livestock, is you'll end up dealing with OSHA at some point in your life. And you can also use it for borrower training costs if we require you to use it, as long as it's one of the approved trainers that we talk about. And that's something you'd want to get from your county office. You can also use it, again, for refinancing farm-related debts and other than real estate. Again, you can't refinance real estate, but if you have debts and it makes your farm more profitable, you can use that. As far as that, OL loans for refinancing can be used up to 4 times or fewer, as long as it meets the following conditions. A designated or declared disaster caused the need for refinancing. So if you're in an area, you got tornadoes, flooding, whatever you want to say that's been stated as a natural disaster, and it usually happens from the governor or the president, you can use that for that. Or the debts that you do have are not owed to the USDA. So it has to be another creditor. It can't be a loan that you have with us. We have different programs for that as far as helping you refinance it. And you can use it for minor real estate repairs and improvements, provided the loan can be repaid within 7 years, because usually our term limits are usually from 1 year to 7 year on our operating loans. Again, for the OL, you must comply with the general eligibility requirements that I discussed earlier, and make sure that anybody that signs promissory note must not have received debt forgiveness. So again, debt forgiveness, if you've had it before, will cost you from getting a loan from us. And you have to actually be authorized to operate in the state that you're going to be doing the farming. So that's just something that I really haven't run into too many issues, but got to make sure that you're able to operate and farm and do what you're trying to do in the area that you're at, because sometimes cities and counties have certain codes towards livestock or agriculture itself. So just make sure you're following all the laws for your area. So as far as the term limits, basically, if you're going to buy, let's say you're going to use the money to buy a tractor, you can get that financed for up to 7 years with an annual payment every year from the close of that loan. If you're going to do something where it's the cost for seed, fertilizer, for your crops itself, you're looking at basically an annual loan, which is a year. So that's just something to think about. And for microloans and beginning farmers, or a veteran farmer, as a matter of fact, this time doesn't count towards your overall terms as far as getting the loan. Because again, I talked about where you're only allowed to have so many loans through, so many years of loans through us. And again, youth loans are not counted towards this limitation either. So the maximum number of years a beginning farmer receive OL assistance is 10 years. So to be even if you've been farming for over 10 years, we don't consider you to be a beginning farmer, and your time's not going to count towards, it's 7 years. Like, so if you get a loan, you can get as many loans as possible as long as you're not over that financial threshold. But just remember that you can't be over a certain amount of years, because you're just not going to qualify for our loans anymore. And for the direct for operating loan, our limit is $300,000. Now here's the catch. So let's say that but you've been farming for a while, so now you're able to get up to $300,000 from us. So you get a $300,000 direct loan. Okay, does that disqualify you because you already have $300,000 threshold for guaranteed loans? I mean, for farm ownership? No, because you can actually get a $300,000 direct operating loan and a $300,000 farm ownership loan. And at the same time, you could still qualify for the $1.399 million through a guaranteed loan. So if you're at that point where you're that big enough farm that you're getting that kind of help, you can. I mean, the money's out there. And again, as far as that is how I explained about how entities work as far as LLCs, it's the same thing as far as if the farmers have a certain amount of loans already with us, that comes into play. And that's something you can talk to the loan officer in the county offices about. And again, just like farm ownerships, we only require annual payments. So again, as far as the loan terms, can't exceed 18 months from the date of the note. So if you do an annual loan, we can make it up to 18 months. Usually it's a year that we do that. Other terms would be 7 years, 5 years, 6 years, whatever works. The repayments may include equal, unequal, or balloon installments. If you need to establish a new enterprise, develop a farm, or recover from a disaster economic, I try to steer away from balloon payments. I like to try to make them even, just for the fact that, just like when a housing industry crashed, those balloon payments killed the borrowers. So I like to try to keep it even and get used to it. But if I understand if you're doing a type of agriculture that's going to take a little bit of time, then we understand that. So real quick, I talked about farm ownerships and and direct operating loans. We have our microloan program. This is probably our more famous one and our more popular loan program for beginning farmers, because you're not going to have the farming experience to get a loan for up to $300,000 starting a shoe, because you don't make the 3 years experience. But let's say you were able to start off small and use our limits, and I'll talk about the limits in a sec. And a lot of this is used for niche type farms also. We do it in a lot of states: shellfish, honeycheese, bees, you name it, we have loans out there for it. A lot of organic farmers start out with microloans. So a direct operating microloan, again, excuse me, is up to $50,000. Anything over $50,000 is not a microloan. Same with the farm ownership microloan. It's up to $50,000. Operating is going to be 1 to 7 years. The direct farm ownership microloan, which just started last year, is going to be up to 25 years. Now, be aware that if you get an operating loan, a microloan, and a farm ownership, the total amount cannot exceed $50,000, because then you'll not be considered a microloan. You can get a $20,000 operating loan and $30,000 farm ownership loan. That means $50,000, and we're fine. We are looking at something under the new farm bill that's going to be looked at and come out sometime next year, where you can actually get the threshold of 50 in each. That was our initial intention, but right now we can't because of the definition of a microloan in the farm bill. Real quick, you can use it for all of these items here: startup, just kind of like anything in an operating loan. The little picture that I like to show there is from a containerized farm. We've done loans for that. I've done a few up in the state of Massachusetts. So microloans are really there to help you start up. It's an awesome program for the fact that not too many businesses are able to get this kind of cash to be able to start an operation, and we do have this program for you. Security, I'm going to touch base real quick on security. Your loans have to be secured. There's no ifs, ands, or buts about it. Microloans, we usually look at about 100%. Now, we understand you're not always going to have the collateral for a loan. So if you're doing an annual loan, we'll look at your crops as long as it makes sense for us. So that's something that we'll look at. If you're buying a tractor, we'll use a tractor. We steer clear of anything that's not associated with the farm unless you're really getting into big operations, and somehow the only way you can cover it is by using your personal property or your house. We stay clear of that. We like to use what you use for the farm. So something to think about, but don't fret if you're a startup operation, because we can take a look at your crops. Kind of like the container operation, we use the equipment. But just realize we're going to use the term of the actual security for how long we can go out in the loan, which for these would be only 7 years anyways. We will take a lien on the assets, anything over $5,000. We like to do what's called a UCC through each state. So it's something to look at, but we don't require that for conservation loans, microloans, or youth loans. So if you're going to use security, your real estate as security, you can use that property as long as there's equity in it for more than one loan. That happens sometimes. You put like $300,000 down. There's still $200,000 in equity. Loan on the property, but you have $300,000 equity on the property. We can use that as security. Same goes with chattel, which is pretty much equipment, livestock. We can be used for multiple loans as long as it covers the 100% to 150% that is required. So if you're going to do real estate, we're going to require the first lien if available. If not, we're going to take a junior lien under the following conditions. If the lien contains any provisions that may jeopardize the agency's interest or applicant's ability to repay the FLP loan. We're going to look at it heavily, especially if we're going to be doing a junior lien. We want the prior lien holders to agree to notify the agency prior to foreclosures. Let's say, God forbid, you don't make your payments and the bank's going to foreclose on you. We want to know ahead of time. There might be something we can actually help out with. And you want to make sure they don't increase the existing prior lien without the written consent of the agency and equity and the collateral exists. So the bank will definitely be wanting to talk to us. So let's say you turn in an application. You're going to have 60 calendar days after the FSA loan officer receives a complete loan application. Complete is everything that they've requested is turned in. On average, microloans are going between 25, 30 days approval. Anything as far as farm ownerships might take a little bit longer because you're going to have where there's a lot more of a process, and you end up doing with the closing for attorneys and stuff like that. So, and if you get disapproved, we'll let you know. And usually, we like to sit and talk to you what you'll need to do to actually, so later on you can get approved. So eligibility, things that we look at, do you meet the general eligibility? Those are all the standards I talked about. And do you meet the specific eligibility requirements for the type of loan that you're looking for? If you're a brand new farmer and you're trying to get $300,000, you're not going to, you're shooting for the moon before you even have the rocket ship. So it's something to think about. We look at the feasibility of the loan. It doesn't make sense. Are you fudging numbers? We know we can figure out by what type of commodity you're using, what you can sell it for, how much you can grow. So just don't make up numbers. Do your research. You are going into business to be a farmer. Do your research for the operation that you can grow so you have a great understanding of it. Just don't come in with some fictitious numbers, because we'll know right out of the bat, and that's going to basically get you to the point where we'll deny your loan. If you don't know, work with your loan officer. That's what they're there for. And again, we're looking at security. And the other thing is we're looking at the environmental of that property that you're doing the loan on. That's something that we'll actually do a checkup on. If you're required to do borrower training, to improve your skills to successfully operate a farm, build equity in the operation, become financially successful, and prepare to graduate from an agency financing the commercial source of credit, you have up to 2 years. So that's just a requirement that we require for new farmers. Same would go with financial training if required. And these aren't things just to punish you. These are things out there to help you be a better farmer. And there's a lot of programs out there to take advantage of. And again, if you agree to do it, these are actually our federal regulations that require you to do it that you have to satisfy the training requirements. So it's just something that you might be out there. That's something you'll talk to the loan officer about. I don't always require my borrowers to do it. Sometimes I have waivers. It just depends on the experience of the borrower. And so if you're an applicant that applies for a loan to finance a new enterprise, such as new crop, type of livestock, and you agree, and you must agree to complete production training with regard to enterprise, even if the production requirements were waived or satisfied under our previous loan, but you're doing a whole different type of crop, and you're required to do it, you have to do it unless you got another waiver. So each loan is going to require that waiver, or you're going to be required to do that. That's mandated by regulation. So real quick tip, if you don't know how to actually what we're looking for finance-wise, this is something I always say, just pull up. Schedule F is what we use for IRS for farmers. This is usually when farmers have been doing it for a while. This is how they report their income of the farm. Pull one up, and this is a good way to base a business plan on. This would be where you do the income. This is actually where we look at as far as your expenses. Now, if you're doing livestock operation and you have no cost for, let's say, feed or veterinarian bills, okay, then you haven't done your research on it, because your animals need to eat, and you definitely want to take care of them by having the right types of shots and medical facilities. So, but this is what we'll look at as far as your expenses. I always like to tell my new borrowers this is something to pull up and kind of get an idea how you can base your expenses, because it's nice to have a business plan, but we look at the numbers. That's what we look at, is the numbers. Is this farm going to be feasible, and are we putting you in debt that you can't afford? So if you want to get a loan application, you can go to any FSA office. You can go to our FSA website. What it'll do is tell you the state, click the state, you'll find your county office by going county offices, and that'll give you the phone number to call. I would always call ahead of time. Just don't show up at a county office unless you got a little bit of time. But it's tough for a loan officer because they are extremely busy. They're doing 10, 15, 20 loans that they're processing and constantly flowing and people coming in. Make an appointment so you can go and ask the right questions and you're not rushed through. It might take a week or so before you get that appointment, but call them, ask for an appointment to talk to them about starting a new application. Or you can go to eGov's website at www.sc.egov.usda.gov. And as far as an agency, and I want you to call me personally if it becomes an issue, is they can't refuse to provide a requested application to any person. They can't discourage you to not do a direct loan even when funds are limited or available. So if we don't have funds, they can say, well, we don't have no money, come back later and do the application. No, still do the application. That's a requirement. That's what we require our farm loan officers to do. We can't make oral written statements that would discourage any individual from applying for assistance based on any ECOA prohibited basis, which is race, color, religion, national origin, sex, marital status, age, applicant's income deriving from public assistance, or because the applicant has in good faith exercised any rights under the Consumer Protection Act. We take this to heart. If I get calls like this, I take it personal. I don't like seeing that. I'm all about supporting the farmer, and I love startups. That was one of my favorite things to do when we get a loan and come back a year later and watch these farms in operation. And if you're struggling getting this application and you're trying to fill it out, this is what I tell you. You're starting a business, so you should really learn how to do something like this, but don't take a fret. I understand sometimes it's something new to you. You can actually get help from your loan officer. I've sat through and walked people through their applications. So it's something to think about if you do need assistance on that. But if you're going to start a business, it's something good to learn. Is the paperwork's part of running a business. All right, so before I run out, I want to thank everybody for, and I know I'm going to answer some questions. I appreciate you guys taking the time to listen about these programs. I'm not somebody that grew up in agriculture. I had to learn at it. I'm a financial guy, but I loved going to farms. I love seeing startups, and I appreciate when I walk through the fruit and vegetable section of a grocery store now. I look at it a lot different because over the years of seeing the farmers' hard work and what they do out there, I look at the tomatoes different. I look at the strawberries different, especially strawberries. I love strawberries, but I just look at these things a lot different and appreciate it because without the farmers out there, my kids don't eat. And people got to remember that's what you guys are going to be doing is helping this country get fed. And with that, here's my information. So that's my direct line. It's 202-720-3168. That's my phone number to my desk. You would not get somebody calling. You can leave a message. I'm hard to get a hold of on the phone sometimes because we do a lot of traveling. It's best to email me, but I will get back to you in the email a lot quicker. It's norman.cummins@wdc.usda.gov. Don't be afraid to contact me. And if I have a question I can't answer, we'll get the answer for you. So feel free to definitely take that information and use it. And at this point, I'm going to pass it back to Paul for the Q&A.
Well, thanks so much, Mr. Cummins, for that just really comprehensive view of the loan programs. I know this is going to be something we're going to archive, and I think it will be a great resource for people in the future that are AgrAbility customers to be able to refer to this and just get a really clear picture of what's available to them, and in addition to other people that may not be associated with AgrAbility that will be able to access it. So thank you for providing this resource for us. I know we do have several questions already that have been submitted. Please, again, feel free to enter your questions through the chat option. Also, if you'd like to raise your hand, you can do that, and we will activate your microphone or your phone line. At this point, I'm going to do our 4 quick poll questions to get feedback. So if you would let us know, first of all, your affiliation in regard to an agency you might work with. If you're a farmer, many people are multiple categories, but if you could give us your best shot at that, we'd appreciate it. We will give you just a few more seconds on that poll. I know we have a lot of AgrAbility staff out today, so again, when we get this archived, please make your customers aware of its availability. So there are the poll results there. Need to save those results quickly. And our second poll question asks about the information that was shared today. Could you please tell us if the information was valuable to you and met your expectations? Our last session in the AgrAbility Virtual National Training Workshop for this year is this afternoon at 3 p.m. Eastern Time, and it will be unconferencing. It will be a structured discussion in regard to seeding for AgrAbility customers, specifically tractor seeding and other heavy machinery. So please participate and share your views and your experiences there. I'll be closing this poll. And then the results. Saving the results quickly. Third question asks about the technology today. Did the technology work for you? Were there any problems? Let us know. If you had specific problems, again, please enter those into the chat window, and we'll try to address those for the future. Also, if you had more than one person at your computer, if you could let us know that also through the chat window, that would be helpful for our attendance records. A couple of seconds there, and I'll close the poll. Show you the results. Saving those. And then the final question. Based on today's session, would you attend another session in this series? We do have webinars approximately every other month. If you're not acquainted with us, and since you registered for this event, you will be on the list to receive future notifications about webinars. Okay, closing this poll and showing you the results. Okay. At this time, I'm going to turn things over to Sean Ehlers, who is assisting us with the question and answer period, and he will be putting up the questions we've received so far from Mr. Cummins, and I will again exit for now.
All right, let me look at this. So, can microloans be used to pay for assistive technology like heavy-duty outdoor wheelchairs? A wheelchair would be an essential tool for farmer paralysis. That's going to be kind of difficult to try to show that was beneficial to the actual farm. I'm not saying no, but that's something you definitely want to go to a county office and talk about and show them how that would be beneficial to the farm that you're operating at. I mean, if there's a way that you can word that to where it's beneficial to the farm, and then there's a possibility. But there are going to be other programs out there that probably would be more assistance to this. And then there's also some stuff that actually works out of the county offices for grants. So I can't say yes to this answer, but I wouldn't want to say no to it either, because depending on how that's used for the operation, there's a possibility. But at this moment, I would want to say no, but don't take that as an affirmative no, because you just never know as long as you're able to explain it. And no, not all crops require crop insurance to guarantee repayment. It really depends on the crops. So it just depends on what you're trying to grow. That's something that because the crops insurance itself is ran through the county office. I'm considered a federal employee. In the counties, you actually have state employees. Even though they're USDA FSA and we fall under the same bubble, they actually work for the county office itself. So that would be something that when you decide you want to farm, you would talk to them about what you're going to grow and if this can be required to have crop insurance. So it's like 50-50. I've done a lot of loans where I haven't required crop insurance, and then there's been some that I require it just because depending on what they're growing. If you're going to grow your standard stuff like potatoes, corn, wheat, yeah, you're going to have crop insurance. But if you're doing something out of the ordinary, something a little different, then you might not be required to have crop insurance. Youth loans have to be connected with FFA or 4-H projects. No, but the stipulation for youth loans, that's a good question. I actually like that. It has to be, they have to have a mentor. So usually in your schools, and it used to be rural youth loans. I actually removed the rural out of it because it used to be of a population of 50,000 or less, but we're really trying to go with a focus on urban farming quite a bit in the cities. So it's not required, but there has to be some kind of mentor that is working with these kids that has a agriculture type knowledge for them to get a loan, but that's not a requirement to actually where they have to be FFA or 4-H. There's a lot of different types of groups out there. There's a youth Indian group that's out there that we actually added the verbiage in there for our wording for youth loans. As long as they can show that they have a mentor for this type of project, and the youth loans itself are up to $5,000. So, which I've done a lot. Those are some of my favorite because these are young kids getting, at minimum age even 12 up to 18, getting these loans to start out to be farmers, and then next thing you know, their farm's grown and they're 18 and they're ready to expand. I've got a guy in Massachusetts right now. He does broiler chickens. It's awesome to watch him grow. He's getting ready to purchase his own property. Are the production and financial management classes only for people who have been awarded loans, or can a potential borrower participate and then apply later? Oh, absolutely. You can always participate in these. These aren't just a requirement. If you want to know the ones that we will accept, contact your county office. That way you're not taking, because there's a lot of programs out there. Make sure you're not taking a class that's not going to help benefit you later on. So go out there and ask. But no, educate yourself. There's a lot of programs out there. We do a lot of grants for a lot of these programs out there to help educate farmers, get them started. No, I love speaking at these type of things, and I love speaking at things like this because this is how you get educated. And for you guys to even join, this tells me you have a desire to learn about what you're getting into. So no, definitely get out there and educate yourself. Horse farm was separated out. What if it is a equine facility that provides board for horses, training, and riding lessons? Absolutely. Again, sorry. It's just we don't deal with horses at all. We would look at if you do the feed for the horses maybe. But yeah, unfortunately, we don't do horses at the time. Will it change over the years? Who knows? But we just stopped doing loans for horses for quite a few years now.
Okay, we did have one additional question that was asked after the question slides were presented, and this relates to the future farm bill. It may be outside your scope, but I'll go ahead and address it to you. In the past, the terms for or the categories that encompassed underserved audiences dealt mostly with minorities or veterans, but people with disabilities have not been included as an underserved population. Just from your knowledge, do you see any chance of that changing so that people that had disabilities would be considered underserved by the definitions that you use?
Wow, that's a great question, actually. And I'm a disabled veteran, so I kind of, I'm only a small percentage, but at the same time, I feel for you. I go to the VA hospital. I see a lot of people that are injured, and these guys still are out there and they can still operate and do farms. Here's what I tell you about the Farm Bill, because like anything, it's something that's going to be passed by the Hill, discussed heavily. We've noticed last year there's been a big influx of the Hill getting involved with agriculture because the constituents are getting their voices heard. So this is what I tell the person that asked that question, and to push it even more. Leave a message with your senator, your congressperson for your area. Discuss this as a concern. Set up an appointment if you can. Try to get that heard. Find out who the senators are on the Ag Committee. Matter of fact, I'm getting ready to go see them speak, and I can't remember the gentleman's name. There's a big Outlook agriculture conference going on right now, which is where I'm going right after this to discuss where agriculture is going to be for next year and the Farm Bill. That's something you'd want to do. Get your voice to your senator and your congressperson. Let them know this is your concern, that you're an able body. Even though you're disabled, you can still do and operate farmings that, maybe that should be added into the language. And I don't see why not. I mean, it should be. But that's just me saying it out. You have to actually talk to the people that make those laws. And that's about I would say 5 blocks away. Even leave an email and send a message to the secretary when our secretary finally gets confirmed. Get that voice out there that this is something concerned, because right now they are talking about the Farm Bill. Okay, so this is the time to try to get that language added for the 2018 Farm Bill. So if that's a concern of yours, definitely get your voice heard. I mean, that's part of what we appreciate the farmers out there. They will get their voices heard and their concerns about what the Farm Bill is going to be added to.
Okay, great suggestion. Thank you for that. And we'll definitely plan to pass that on. We're having an all-staff web conference next week with AgrAbility, so we can mention that and encourage people to have their constituents get out there and make their voices known.
That's the best thing to do it. Yep.
Thank you. And thank you again for the great presentation. Thanks to everybody that's joined us today. Again, one more session in our series at 3 this afternoon. Hope you'll join us, and have a good day.